Let's welcome in Joe Terranova of Virtus and the Halftime Investment Committee. This was all about Brainerd. Faster, QE, QT, faster than the last time. I mean, this was like the most dovish person on the Fed going straight up hawk.
Well, you could ask Lee when you speak to him. We have an adversarial Fed. That's exactly what is going on right now. And originally the thought on Wall Street was that it was the price of equities. It was the price of bonds that the Federal Reserve was trying to kind of cool the fever. No, this is more than that. Federal Reserve is coming directly after the consumer. The Federal Reserve is trying to cool, shelter inflation. They are going after what is right now an incredibly hot real estate market. Scott, look at rentals in downtown centers throughout the country. They're moving higher and higher. Utility costs are moving higher. So this is about going specifically after the real estate market, and that hasn't corrected yet.
What's it mean for stocks, right? There's been a suggestion all along from the doubters, the haters, that this was just a bear market bounce to begin with, that you all needed a reality check if you thought this market was just going to continue to go up in the face of what Brainerd was talking about. And she just slammed the door shut, did she not?
She slammed the door shut in terms of taking out the previous highs for the year and doing it in a very aggressive way. I think the market right now is in a grind. I think the market remains in this kind of malaise. Volatility is the word, persistent volatility. I think investors are still thinking they could go to some of these longer duration assets. And I hate mentioning Cathie Wood's names, but these are the stocks, these Cathie's type of stocks. Investors are kind of clamoring towards that in the last couple of weeks. I think that's the wrong place to be. I think the downside is kind of protected. We've been there. We've seen what that looks like. I think now it's about marking time. It's about being tactical. And how do you want to be positioned? I want healthcare right now. Healthcare is my most favorite sector.
You see the move in, I know everybody's fixated on what's happening in the stock market, right? And you see what technology did today in the steep sell-off and selling off into the end. It's one thing to show the level of yield across the curve. It's another thing when you put into perspective the move we had today in interest rates was 6% in many of the different treasury areas that I'm speaking about. It shows you why when I spoke to some of the smartest money on the street earlier today, they're sort of mystified. It's like, how in the world are stocks hanging in there if bonds and yields are doing what they're doing because of Brainerd? And now I just wonder if the writing is on the wall for what lies ahead for stocks if rates continue to do what they did today.
So, first of all, in terms of a 10-year yield, you're right back to where you were in April of 2019. Ultimately, the high point was 3.25 during that period. So I think there's further to go here on the upside for a 10-year. As I said, stocks are going to grind. They're going to basically trade in a sideways pattern. But here's the critical component of this. Scott, it's the balance sheet. This is all about the balance sheet. So if you think about when we initiate the previous shrinkage of the balance sheet back in 2017, the size of the balance sheet was $4.5 trillion. We got it down to about $3.7 trillion in August of 2019. We're sitting close to $9 trillion right now. The pace previously was $50 billion per month that was coming off the balance sheet. You're going to have to double that or triple that to get the balance sheet back to where you started within the next 4 years.
Trying to figure out what then as an investor I'm supposed to do. I can't own long duration, as you say, technology stocks, some of the higher valuation ones. What am I supposed to do with housing stocks, which have gotten creamed? Utilities have been winning, staples have been winning, real estate, to your point, has been winning, healthcare has been winning, and that's why you said you like healthcare. In fact, you made a move that represents that. Tell me about that.
Bought Amgen today. Sold out of Sensata Technologies, and that's a high valuation technology name. Took an 11% loss there. Finally went into biotech at a reasonable price. That's what Amgen is here, trading at 16 times earnings, 3% dividend yield, growing its dividend over the last 5 years by 11%. I want to be in healthcare. I own right now AbbVie. I own Merck. I'm adding Amgen to that portfolio. Don't forget UNH, which is also working as well. I think to answer your question, it is about right now investors going back to a playbook from prior decades that focused on more quality companies. And guess what? Show me the revenue right now and what's your margin going to be as we move forward.